Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great day thus far. I'm actually trying to find, where is my icon that says, I was trying to find it. Anyway, I hope everybody's having, like I said, a great day thus far. It's been a pretty busy morning. I want to say that the reason why the market's been a little busier this morning is, like I said, during the FA.C.E webinars, we didn't have any real movement in European trade. And then all of a sudden, the markets come in and they're a little, I think a little shocked that we hadn't seen a sell-off in, a sell-off, or excuse me, a rally in equities. And so we got the sell-off instead. So with that being said, I think that there's a risk that we actually take on not only this 50% retracement, but we might actually trade down towards the 618 today, because you'll notice with the price action, and I want to point this out, it's bearish price action at the moment because we're not bouncing. Like when you get a sell-off in this case, and we could have the same argument about a rally, like we were talking about with the dollar yen earlier today. When you get a sell-off and then you're not really bouncing, you have to think about like the mechanics behind that. Like people aren't finding value, and they haven't been for the last 15 minutes as we're sitting down here. They're not finding value in the S&P at these levels. So now it's building more of a risk to the downside. So now you go, okay, well, if we get any pop back up into resistance, it's probably going to be sold. And so I guess, since I'm on this chart right here, what I'd be looking at currently with the S&P is I'd be looking for a move back up to 3,900, especially, how it is. The market's going to open. We're going to see, we're going to see a little, we're going to see a little bounce in stocks right at the open. But where do you want to be on the short side of risk? I think back at 3,900, right? So now you put in 3,900. I do think we're in a range, but I think now the support that could be tested today. Let's go over to the hourly. I think the 50% retracement, because there's, this, you can, shoot, I grabbed the wrong thing. I hate it when I do that. Put that back. Dang it. Stop. Okay. Right here. Okay. So you can see this little horizontal support comes in right at the 50% retracement. I think that's going to offer support today at 38, let's call it 38.55. I don't imagine that it's going to be like, we're going to see like huge volatility today. I don't think that's going to be the case, but as I pointed out yesterday, one of the things that's been changing here recently is that we are starting to see sell on rallies now, which means that, at the end of the day, maybe we get a late day slide in equities like we saw yesterday and the day before. I doubt we're going to make it to 38.25, but I'm going to write it down just in case. Okay. And you know what I should write on the upside just in case? I know we're talking about 3,900, but I will write 3,950 again. I don't think we're going up there, but with this market, you never know. Okay. And we're just range bound. I'm not convinced that, stocks are going lower and, we're going straight to 3,700 today. I'm not convinced about that at all. Okay, let's go into the rest of the currency. So the euro's very sideways at the moment. We're bouncing, off the 127% extension. That comes in at 1790. That's obviously support. Okay. $17.90. Resistance should be at 118.40. I'd give it all the way up to 118.70, to be honest. I think we're bearish. Now, if we break 117.90, which is basically the lows, next stop is going to be 117.40. I will write that down. But you know, when we're in a if we're in a risk-off environment, I want to point this out. A lot of people believe that, you know, risk-off equates to dollar strength. That is not the case. That really isn't. It will equate to dollar strength against certain currencies, but not universally. Actually, the euro tends to be one of the better performers because you start to see the euro crosses move. Now, one of the other things that you have to think about regarding the dollar is the dollar does become the safe haven currency of choice in a severe risk-off environment. Like when we did the lockdown, you know, obviously the dollar ripped across the board. But, you know, when we're backfilling, you know, lose 5% here, lose 8% there, you know, not really seeing a major reversal, then, you know, you're going to see stocks, you know, pull back, and the dollar, you know, it will have mixed results. You'll see the dollar outperform against commodity currencies typically. All right, here's the cable. Now, the cable's actually had a pretty good bid most of the day, and I'm not sure why, but we have, and maybe there was some economic data that I just didn't see. We should find resistance on rallies back at 37. This is 37.50, but let's take this low right here. It comes in at 37.80. That should be resistance today. Since we're below this trend line, we have to flip to bearish now, near term. But let me be very clear here. I am bullish the cable. I am bullish the cable, but I'm buying it down, you know, at 133, 134. That's where I really ultimately want to buy it. Okay. 88% retracement, just in case we take out these lows, which is possible. 136.50. Okay, let's talk about the Aussie. This is obvious. I'm just going to write down this 75.60. You guys got that? Does that work? I'm joking. All right, let's get rid of those. But you can see how important that support is, right? That is key. That is the head and shoulder neckline. That's how important that is. Resistance. I would think if we get like a little pop, see this support level here. Whoops, shoot. See that support level there? See that little support level there? See that right here? If we get a little pop in the Aussie up to 76, let's just call it 77. You got to be a seller there. I think so. It's not bearish yet. The Kiwi's bearish. What did we write yesterday? I think we were like 77.20 or 70.20, if I'm not mistaken. Yesterday. Yeah, we did. I don't think our numbers change here. All right. All right. Dollar Canadian, same thing, you guys know, right? Super important resistance. We flipped to bullish above that. You guys know that. Yesterday we dipped to 125.40. Well, we went to 125.46. Hopefully you guys picked up some there, but I'll write that again. I'm just thinking that, if you get dips down there, you got to take advantage of it. Okay. Hold on. Coffee. Let me write this down. 93.70. It is already bullish. I was going to buy some last night. I didn't yet, but I think if we get a dip to 93.25, you want to be a buyer. So I'm going to write down 93 cents. And the reason why, see this flag right here? So let's say we get a dip back down to 93. Yes, that would be it. Okay. Ooh, that I got to leave that 93. Now, and one of the reasons why we could get there, in my opinion, one of the reasons why we could get there is because if you look at yields, they're coming down a little bit. So if yields continue to come down, and let's say what Stelios was saying earlier is, they break down a little bit when we get down towards 150. Well, if that happens, then the dollar Swiss might actually slip to 93 cents, and then you got to be a buyer there, right? That's all I think. Okay. Dollar yen. Same as yesterday, right? I mean, it's super bullish, just holding up. I mean, unless it breaks 108.30, you can't be bearish. Right? You can't be bearish that right now. I mean, I'm having a hard time selling yen pairs because of that. I covered my euro yen, was it 2 days ago, at 128.70. I know it's at 128.80, and I'm like, man, I could short it here. It's a better price. I think yesterday or this morning or something, it was at 95. I forget what it was. And I was looking at that, and I'm like, God, but the dollar yen is so strong, so you can, I'm prohibited from selling the yen pairs because the dollar yen's so strong. But like I said, maybe Stelios is right here, and we see a dip in yields, and maybe that allows the dollar yen to back it up back to 108.50, and then I might actually get long down there. I think it's so bullish at the moment, because where you're wrong, and whether you put your stops here at 108.30, or you put your stops here at below 108, if it really gets below 108, then you have to probably be done with it. But that's some bullish price action there. Really is. Okay. Dollar index. So dollar index is in breakout territory. It is a bull flag pattern. So it, just realize that while we're above 92, I'm gonna even give it down to some of these previous highs here. While you're above 92.20, you have to stay bullish. Oops. There's a lot of dollar bears out there that are getting smashed right now. 92.80, let's just call it 92.85. That's the 127% extension of this move. You can see it's right here, right? 161% extension, which I think is a more doable in this. If I had to imagine, like this is just me thinking about what I think the dollar is going to do. If I had to imagine it, we're doing this. If I had to guess, that's how it's going to look. And I may be wrong. I like to imagine what I think is going to happen in my head and play into that. But I just think that that's, I don't think this 127% extension is really going to stop us. It may today. I mean, I'm just saying that overall, we're not going to see any type of real consolidation until we get to this 161% extension. Okay. Where am I at? Oh, US dollar, Norwegian krona. Everybody should know this. 860. If it gets above 868, I'm adding there just so you guys know. I know. So let me just tell you guys how I'm playing this. You guys know I got a long core long position in the US dollar, Norwegian krona. Okay. If we get above 868, I'm adding. We get above 873, I'm adding more, and I am looking for a move towards 9. Okay. And you can play this range like a range breakout, basically. Like that. Okay. That's how I'm playing it. I'm already in a core position. I've got a decent size position. I want it bigger. Okay. But I have to see, I have to wait for the whites of their eyes first. I have to see the whites of their eyes first. Support 855 for now. I know. Well, I flipped it to bullish. It should be on range. I'm bullish. That doesn't make me right. I'm just, I'm so bad when I flip it to bullish, but I can't yet. Dollar Mexican peso. It's the same analysis as yesterday, but look at this. Inverted head and shoulder pattern in a channel. Here's your neckline. I guess you can actually say there's your neckline right there. So it's 2095. What's the spike high there? 2093. So basically 2095. We break above that, and then you can see it, right? We are in a range. I mean, I would argue that it's a bullish range. I think it's a bullish or ascending channel, right? So I think we're going back towards 2150 back here. Oh, wow. Dow's moving lower here. It's interesting. It's more of that, oops, sorry. More of the rotation. Support dollar max is going to be right here at 2060. Gold, silver. Oh, wow. What the hell happened to silver and gold? I wasn't even looking at those. I had my eyes on Bitcoin. Wow, that was a hell of a snapback. I didn't even see that. Maybe it's more of a yield move. Maybe Stelios is mine. That's what happens. That's what happens when Stelios steps in and buys. Shit starts moving. Gold. Same as yesterday, right? 1720, 1760, 1760. And I have to maintain as long as we're below 1765, it's bearish. I know it just spiked up this morning, but looks like silver held. I mean, we dipped to 24.38 and then spiked up. So I guess what we have to really pay attention to, oh, shoot, I didn't want that. I guess what we really have to pay attention to is this 24 level. I think that's going to be 24. Maybe we rally back today to, what do you think, Stel? Do you think we stop here at 25? Maybe back up to 25.50. I'm gonna write down both because I think 25 might stop us in our tracks right now. I know we're here. What do you think?
On the upside, you mean? I don't know.
Well, you're no help.
I know that if we do get to 24, I'm going to be adding a little more and then a little more at 22. But that's not going to happen today.
No, I don't think it's happening today either. Although Bitcoin's moving, and Bitcoin found some support ahead of 50,000. So I'm going to just assume that round number is going to be a big number. I mean, 50K. I am flipping to bearish today. We are below this trend line. And while we're below roughly about 54,000, I'm staying bearish now, near term. I mean, it hasn't rallied and it's really struggling here. So, anyway, there's the bias chart. Steve, Stel, how you guys doing this morning?
Good,
very,
mate.
Very good.
Good. They're jacking up the stock market right now. What they always do every open. Let's get past the amateur half an hour, which is
happy hour.
Yeah, it's definitely amateur hour nowadays. I mean, you just get this blind buying that comes in the first half an hour, and then after that, people settle in and figure out what they want to do. But one of the, I think, interesting things about the market is, and I was talking about these dynamics yesterday during the closing, during the daily roundup. I'm like, you got to watch the market. That the attitude or the sentiment is shifting a little bit. You're starting to see sellers step in at the end of the day because it's the people that are buying early on that they're not being compensated. So it's interesting to see them come in and step in and sell at the end of the day. And I think we got to watch that dynamic as it takes hold. So, I'm going to pass it over to you guys. I got to go let the dogs out. No, we don't need to see that right now. Nope. I'm turning it off immediately if Steve starts singing. But anyway, okay. No, I'm just kidding. I got to let the dogs out, but I want to say you guys have a great trading session, and thanks everybody for tuning in, and thank you all for your continued support. If you guys are watching us on YouTube after the fact, make sure you join ForexAnalytix, and also, make sure you give us a thumbs up on YouTube. We'd appreciate it. It helps us out a lot. All right. Thanks, guys. Steve, it's all yours. Stelios, it's all yours.
Thank you, Blake.
Thank you, mate.
Thanks, guys.
All right. So not much has changed since the FA.C.E webinar. Only metals are actually doing quite well from the lows, and equities kind of want to bounce from the open. Bitcoin also, we've been talking about that 52,000 level. It dropped, it nearly hit 50, but for Bitcoin, a couple of thousand here and there is nothing. It's
Yeah. It's just
10
5-minute
seconds.
5-minute noise.
10 seconds, yeah.
Yeah.
So, the markets are trying to rally a little bit on the open, but we'll see what happens. Euro dollar did break 118. Apparently, there were quite a few options with 118 strikes. It went down to 117.90 something, and then just bounced right back. So nothing, nothing of note in the past hour or so. We just want to see how the market.
Do we have any serious data coming through the day?
We have a few FOMC members speaking, but no.
Oh my God, it's a nightmare.
And Bank of Mexico expected to keep rates unchanged at 4% in a few hours. Remember, these guys were at what, 9%, something like that, not that long ago.
Yep, indeed they were.
Yep, it was a nice carry trade, dollar mex, at some point.
Very, very, very true.
Yeah.
Still much higher, of course, than developed countries' central banks.
Yeah, 4%. Oh my God, yeah. I would kill for that for a safe currency.
Yeah, for a safe currency though. Yeah, that's the issue. And what's the inflation rate currently in Mexico?
That's a good question, actually. I think three something. I think they're on a 3 handle. Let me check.
If they say they're on a 3 handle, probably they're on 5.
3.4, I think, was the last print.
Okay.
Yeah.
So they must be at 5-6% inflation. Okay.
Yeah, maybe.
Yeah. So gold retesting once again this confluence of resistances at the 1750, let's call it, area. Several resistances passing from there. While silver, oppositely from gold, posted at the lows of the day a lower low, found support at the 200 daily moving average. So on a daily closing basis, it has still been holding the 61.8% fib at $25, unless, of course, we close lower on the day today. But as we speak, we are exactly at $25, unchanged more or less from yesterday's close, and already pared back all the earlier losses. So let's see what happens here with gold and silver. They remain in broader corrective formations, consolidations, call it as you wish. Now, it's not clear exactly how and what. If we found the low, we haven't found the low, we'll need to wait more. Platinum, same deal, a corrective formation. Palladium remains, during the past couple of weeks, by far the best bid one. If you're asking me, clearly an impulsive move out of this triangle, you can clearly see this. We seem to be wanting to break out of this pennant. I think we're going to register a higher high. As long as we remain above 2,500, I think we should keep looking higher. Copper still within a consolidation as well, although I think quite clearly a corrective one, and nickel remains the weak sister among all these metals. Seems much weaker, and if I had to bet one is going to be moving lower, I think this is the one. Now, Blake mentioned before how USD Yen is holding up quite nicely, and so far it has been following the direction and the general path I was more or less expecting. Now, instead of a corrective move lower, we've had a triangle so far here, but this point's higher, which so far is producing a little bit of a divergence with what's happening with yields, because yields seem to want to break lower from these wedges, both if we're talking about the 10-year one and the 30-year one. So I don't know how sustainable this divergence is between the USD Yen and yields. One is looking heavy and like it wants to produce, the yields are looking heavy and like they want to produce lower lows, at least as a corrective move, right? I mean, I'm not saying that, we've found the high. while USD Yen remains extremely well bid. So in essence, we've had a historical correlation which used to work a lot better in the past, undoubtedly. Yields, USD Yen, and indices were moving in the same path, many times tick to tick. So now we're seeing yields moving lower, risk assets moving lower, albeit neither of them so far in an impulsive manner. So far the move lower is orderly, while USD Yen seems to be completely ignoring what they're doing. So seems to be completely ignoring both its correlation with yields, since it's a sensitive, yield sensitive currency pair, and with risk. Now, the question is, who is telling the truth and who is lying here among these assets? And how long can this keep on going? I mean, how long can USD Yen keep remaining well bid if risk assets and the yields keep being under pressure? I don't think for much longer, but on the other hand, just by isolating the USD Yen chart, if I had to look at that market, exclusively and not even knowing what it is, I would bet it's headed higher. So I don't know. USD Yen has become extremely tough to trade. It used to be very well correlated with these things, and during the past 1-2 years, it keeps flipping correlations or getting completely uncorrelated on occasion. So it's like it has its own mind. In any case, you can't really bet against it for the time being, although the corrective pattern might just prove to be the channel version, like the flag version, in which case we might see a rejection from where we are and move back lower towards 108, even the high 107s before we move higher. That's also a possibility, but for the time being, it looks more like a symmetrical triangle here, like a pennant than a flag. In any case, now I know we had Tracy, and Tracy, talked about crude. What I have to say about crude is it remains below the channel, right? And as long as that's the case, I think there is a very, very good chance to see a deeper correction lower. As I've said, $54 would be my first target here, and following that 50. And I think they're easily achievable targets, given the size of the move higher. I mean, we can see a much, much deeper correction without really breaking the direction of the overall trend. So I would still be extremely careful in trying to buy crude. I think it's too early, and this hasn't been a decent correction enough. Now, of course, there's always the danger that you'll be waiting for a deeper correction and you never get it. But I'd rather have that than have a bad entry when deep down I feel like I need to see better prices to participate. So I'll take my chances. If it is to move higher without correcting further, so be it. I can live with that. Let me see some of your comments here. S&P getting smashed. Okay, I wouldn't call this smashed in any way, but yeah, it is under pressure. Silver head and shoulder on what time frame, mate? You see head and shoulders formation on silver? I'm assuming you might mean this one. Yeah, not that pretty looking, not really symmetrical. But yeah, I guess you definitely not a pretty looking head and shoulders formation. But in any case, you want to see it as a head and shoulders formation or not, for several reasons, because we have confluence of supports like the 2450 to 25 area remains a critical support area, which, if we break below it, yes, we do open the door for further losses towards at least 22.5. So, we break through 24.50, let's say, the lower boundary. We open up at least $2 more of downside for silver. Irrespective of if you want to look at it as a bad-looking asymmetrical head and shoulders formation or not, several reasons to believe that's the case. But let's first see a break below 24.50 before we can. Can you please comment natural gas as well? Yeah, absolutely.
Steve, I just want to add.
Yes, Elio.
I think the market wants to, after going for so long in such a very, how shall I say it, orderly manner, I think the market wants to start shaking out positions in everything. We're starting with yields, euro dollars looking a
Very
bit
likely.
equities might follow. I think metals are going to follow as well. So
Very,
I wouldn't
very
be
likely.
surprised at all if we see 22.5, even lower, just to shake people who have stops below those lows at what it was at 22 and a bit. So I would.
Once a deeper correction starts, it might get a little bit a snowball effect characteristics because of what you mentioned, positioning being, a lot of people complacently are piling at bad entries in dollar shorts, metal longs, etc. And most of them are people that were in denial and came in late to the party. So yeah, within that context, it is a very likely scenario, but we haven't seen, I think, a big enough move yet to start triggering, the tolerance and the stop losses of these people for this to accelerate. But it is a likely scenario that at some point, even if it doesn't happen now, at some point sooner rather than later, I think that inevitably is going to happen. Inevitably. Okay, let me see. Natural gas, yeah. We were left at natural gas. Natural gas keeps finding support here at the 200 daily moving average. Also 50% fib, just a little bit lower. Now, admittedly, the rebound so far from there, has been nothing but unimpressive. Perhaps this is even a channel, who knows? But as long as we stay above this previous broken longer term channel, I think that we can easily see a squeeze higher. And as you see, natural gas turned lower much before crude oil did, but is now behaving much better than crude oil does. So, we might see natural gas leading higher crude oil, as it in essence indicated a move lower much before crude did. I do think that natural gas eventually is going much higher. Just can't be, 100% sure we've seen the end of this pullback. Definitely momentum has been slowing, and definitely this like 245 area is a strong area of support. But evidence is still not conclusive. Yes, there is a longer term correlation between them, a very vague one, but yeah, there is. Having to do with the question about the correlation, Amira. Let me see. Okay, now having to do with cryptocurrencies. Listen, since there are some comments about them. There is a chance that Bitcoin is breaking down, right? Because I've been monitoring this ascending wedge for quite some time, and we said that we might break lower from here, or there was even the possibility of seeing another push higher within this wedge, even a little bit of an overthrow. I think we had this discussion yesterday before we move lower. So let's see how we close the week. But they look rather heavy, and if we do see a follow through in risk assets lower, I've said it many times in the past as well. Cryptocurrencies are the riskiest and most speculative of all the risky and speculative assets. So I would find it almost impossible to see stock indices, for example, tumbling down, but cryptocurrencies being well bid. I would find that extremely unlikely to happen. So, Ethereum seems to be having a different type of correction than Bitcoin, as you can clearly see. Seems like a big symmetrical triangle rather than an ascending wedge. But in any case, I would be very, very, very careful with crypto assets here. What do you think of silver today, sliding down? Listen, silver does look heavy, since you're asking in essence for an intraday outlook in silver. Listen, silver does look heavy, although look at the 4-hour candle we've been actually having, because it's the current one, right? Now, this is the 4-hour chart, by the way, right? We had this strong move lower, clearly corrective, move higher, lower, a pennant, which was indicating further losses. And we've had this breakdown. Now, within that context, I think we can easily retest the spike low at 24, right? Speaking intraday now. And, you should consider like 25.30 to be resistance. So, I think shorting, if you're looking for short-term trades near 25.30 and expecting, more downside towards 24 is a viable trading approach, if you're asking me. Now, of course, this is a very short-term potential outlook. Longer term, I'm only interested in buying real assets and not looking to trade them in the other side, because my long-term thesis is undeniably bullish. Let me see.
And I agree with you 100% on that.
I do know that. Okay. I think we covered more or less everything. So unless there is anything else, guys or girls, you want to ask? Going once. Going twice. PL. What is PL, mate?
Is that polonium, the radioactive one? No. I don't know what it is.
Ask Putin. He knows.
Oh, platinum. Yeah, okay.
Platinum. We did cover platinum. We did cover platinum. Nothing has changed in platinum. Platinum still consolidating before it continues higher. So a nice flag here, channel. AU, by AU, I'm assuming you mean Aussie USD, right? Sorry for gold. You missed it. Okay, sure. What's the 1750 area for gold? I think it's a pivot area in the short term. So 1745 to 1750, a pivot area in gold. As long as we trade below it, we can see more weakness. If we break above it, I think we should easily see an extension towards at least 1785. So I think, short term, that's where you should have your eyes on, 1745 to 1750. Below it, you can be short-term bearish. Above it, you can be short-term bullish towards 1785. Okay. So, have a great rest of the day, guys and girls. Bye-bye. Bye, Stel.
Thanks, you too. Bye-bye, everybody.